Hey everyone, Jay Duffy here, co-founder of Frame Wealth Partners. Today we are breaking down November's market story, a month that delivered a little volatility, a little drama, and a whole lot of headlines, most of which had investors wondering whether to stay buckled in or close their eyes and hope for the best. Here's the reality. Volatility is normal, markets still finish stable, and long-term investors are still in very good shape. Let's walk through what actually happened, not the noise. So what actually moved markets in November? We saw a mixed month across major indices. S&P 500 up 0.1%, Dow Jones up 0.3%, NASDAQ down 1.5%, and the volatility index, or the VIX, spiked as high as 26, then settled back to 16 by month's end. Year-to-date performance is still strong across the board, with the NASDAQ up over 21%. That's the kind of context investors forget when they only look at one noisy month. One of my favorite slides in this report shows you how common pullbacks are. You'll see on the chart that this year we've had 6 different 5% declines, which sounds scary until you realize this is completely normal historically. Investors feeling jumpy? Sure, but the market's behavior isn't abnormal, the headlines are. Now let's talk about the elephant in the market, AI-related stocks. In November, that sector had its worst week since April. Concerns about spending levels, concerns about debt, and good old-fashioned, is this a bubble panic? But underneath that fear, companies like NVIDIA posted strong revenue and earnings, and many mega-cap names rebounded quickly. A pullback does not equal a broken trend, folks. It equals investors catching their breath. Well, what about crypto? Cryptocurrency reminded everyone why risk management matters. Bitcoin dropped more than 30% from its October highs, briefly breaking below 85,000 and wiping out its year-to-date gain. Crypto is exciting. Crypto is innovative. Crypto also behaves like a caffeinated roller coaster without seatbelts. For long-term investors, speculative assets are optional. Risk management is not. What about bonds? Here's a bright spot. Bonds posted a 0.6% gain in November and are up 7.5% year to date, which is the strongest year since 2020. Most notably, the 10-year Treasury yield fell back near 4%, a meaningful shift that helped stabilize portfolios. This is exactly why diversified allocations matter. Your bonds showed up this year. How about the government shutdown and data delays? Well, the federal government shutdown finally ended after 43 days, see my last video, the longest in history, but it also delayed several important economic reports. We finally received the September jobs reports, which showed 119,000 new jobs created, unemployment rising slightly to 4.4%, revised August data showing 4,000 jobs lost. These are not recession numbers, but they do show cooling. So what's the challenge? We won't get a full October jobs report at all. Markets weren't thrilled, but they weren't derailed either. So what about the Fed rate cut expectations? Well, this part of the update matters most for business owners. Because of the missing economic data, the Fed is flying slightly blind into their mid-December meeting. Expectations for December rate cuts dropped sharply mid-month, then rebounded as more clarity came out. As of now, market expectations show a cut in December, another in April or June of 2026. For investors, this reinforces a simple truth. Short-term forecasting is chaos. Long-term planning is power. So, consumer sentiment fell from 53.6 to 50.3, reflecting concerns about jobs, prices, and household finances. But here's the twist. Even with low sentiment, consumer spending continues to hold up. People talk worried, people spend like they're fine. This is why data beats emotion every time. So what's the frame perspective? Here's the bottom line. As we wrap up the month, markets will swing. Headlines will flare up, narratives will change, but long-term investors who stay disciplined, diversified, and focused on their goals continue to be rewarded. If volatility has you questioning your current allocation or risk strategy, this is exactly what our team is here for. To keep your financial picture framed correctly, no matter what the markets throw your way. So, Jay Duffy, Frame Wealth Partners, we'll see you next time. Have a great December.